The US dollar fell against the basket of major currencies on Friday, posting its biggest weekly decline in 4 years. The Fed Reserve announced on Thursday another stimulus package in the form of $2.3 trillion destined to small and medium-sized businesses, municipalities and the corporate debt market. Too much supply and lower demand weighed on the greenback. The US dollar index, which tracks the greenback against a basket of its peers, was down for the second consecutive session on Friday, picking up extra downside pressure following the recent breakdown of the key support at the 100.00 level. The XY dipped by 0.09% to enter at 99.52. For the past week, it lost 1.05%. The US labor market deteriorated further after nearly 6.6 million citizens filed for unemployment during last week versus 5.5 million forecasted, adding to the surge in initial claims observed in the previous 2 weeks. In the meantime, all the attention remains on the developments from the coronavirus in countries extending the lockdown periods, speculations of the global recession and further deterioration of fundamentals. On the supportive side for the greenback, market participants seem to prefer the dollar to other safe havens. Among measures, sterling strengthened against the dollar last week, posting 1.5% weekly rise, though it ticked down by 0.2% on Friday to finish at 1.2455. The pound retained gains made after UK Prime Minister Boris Johnson left hospital for treatment of COVID-19. Meanwhile, the buying interest in the euro remains weak despite the fact that the net speculative long positions in the single currency rose to the highest in nearly 2 years. The euro ended at 1.0936 on Friday, posting a 1.1% weekly gain versus the US currency. Elsewhere, in the crypto market, Bitcoin slumped by 5.7% to end at $6,875.50 on Friday. For the week, it still posted a 1.4% rise. According to experts, there are signs suggesting that the buy-side demand for Bitcoin is starting to ramp up. Meanwhile, in oil market news, OPEC and its allies finalized an agreement to cut production by 9.7 million barrels per day. That's the single largest output cut in history. However, oil prices dropped as traders feared that the OPEC deal would not offset a historic drop in demand due to the coronavirus outbreak. Thus, analysts at Goldman Sachs are forecasting that the coronavirus crisis will slash demand by 19 million barrels per day in April and May. The market was closed on Friday. On Thursday, the price of Brent crude fell by 4.1% to $31.48 per barrel on Thursday, posting a 7.7% decline for the week. Meanwhile, US crude futures settled at $22.78 on Thursday, losing 19.6%. In the meantime, gold futures for June delivery fell by 0.7% on Friday to settle at 1,740.60. Still, for the week, gold prices rose by 5.77%. Prices stayed near a one-year high, supporting to growing concerns over the extent of the economic from the coronavirus pandemic. Developments surrounding the global coronavirus pandemic are likely to continue to weigh on investor sentiment, with more than 2 million confirmed cases globally. You are watching Currency and Commodity Markets Review on InstaForex TV channel. Stay tuned with us.